Hello, everybody. This is Max Farrell. This is Dex Trader, and this is the Pro Webinar Forex for you. That's not the right one. Silly buttonhead. But today is the midweek. I didn't seem to get it on there, apparently. Oh, there it is. There it is. I got it. Okay, there we go. There we go. Midweek 6-7. Yay, we did it. Mike, thanks a lot for being here. Mike Fickett is on the line with us today.
Always a pleasure. You're a little loud, Max.
I'm a little loud. Okay, let me turn it down just a little there.
Oh, perfect, right there. Yep.
How's that? Better? Okay, good.
Good.
So today is the 7th of June. Holy crap, June's flying by. I don't know if you guys are all about, the time of year, but it's that time of year. Today, and I know we don't have a lot of people in the chat room. That's okay, because I think we lost our little bit of consistency with the webinars, and we're going to get back into doing the Mondays and Wednesdays for sure. Fridays, probably not going to be doing Fridays anymore on the Forex wrap-up, weekly wrap-up kind of stuff. But I am going to put out some videos for it, so keep that in mind. There's a lot of great stuff that we're going to talk about today, so let's jump right in. But as always, earnings risk disclaimer. Okay, that's all I'm giving them. I gave them extra yesterday or the other day. I'm not giving them as much today. What was that? Earnings risk disclaimer. That's about it. That's all you're going to get. What do they used to say? I used to do this gig where everybody, you could say anything you wanted, but you just had to say happy face at the end. It's like the LOL thing, Mike. You ever see that?
Yeah.
So we used to say like all kinds of things. Your mother wears combat boots, and then be like, happy face, So now, anytime I'm about to give you some any issue, I'm just going to go, this disclaimer. Then that's about it. That's all you're going to get, We're going to talk about today watching the news. This is pretty important because as everything, news affects our industry, our business, affects it for the good or the bad. Okay. And until you get a chance to learn how the news operates with your trading, avoid it like the plague. Right? Is that about right, Mike?
Yeah.
Avoid it like the plague. So it's like avoid it like the plague. Yeah. Okay. So we're also going to talk about becoming aware of the market. Now, I know you're probably thinking I'm going to have to start humming and chanting and kicking one of those chanting bowls every once in a while and saying kumbaya or whatever it is. But listen, it really does work, and there's a lot of great stuff we're going to talk about in that today. We're also going to talk about some structure, looking left on the charts and learning how to read that structure even further. A little bit of this each day, each webinar that we do, I always want to have some structure evaluation, right? Things to look at. And of course, we're going to end out with making a reason and debating your inner opposite. I know, right? This sounds weird, but that's basically what trading is. It's fighting yourself on to be able to get in or get out of a trade. All right, so let's get started. You ready, Mike?
Yes, sir.
All right. Mike, in your world of news, how much news does it take to affect your 5-minute world?
Oh my God! And 15 minutes.
Yeah.
As little as 15 minutes.
Donald Trump comes out and his hair blows in the left direction instead of the right direction, and now listen. This is not about political. This is about when that man tweets or twits or twats or twimps or whatever it's called. When he does anything, it's going to affect the market. I can guarantee you that right now. But so do a few other things. Okay, so you get to learn to watch the news and how it affects the market. If you start paying attention, okay, if you're here just to be a signals dude, you just want to just give me my signals, Max. Just give me my signals. I don't need nothing else. That's okay, right? You could be that. If you're still in the very beginning process, don't start paying attention to the news other than it's there. If it's there, avoid it. If it's not, then if you got some time, you want to sit back and you want to take it to the next level, then this is how you'll take it to the next level. Start watching what releases and how much it affects the market. In your journal, start showing maybe even a secondary journal of how much that news gets affected on your favorite pair, right? What do you mean? You don't have a favorite pair yet? Mike, what's your favorite pair?
AUD USD.
The AUD USD. Now, here's the funny thing about the AUD USD. It is affected by what kind of news? Do you know, Mike?
I don't.
AUD/USD is referred to as a commodity pair, right? Which means it's affected by commodities. That's right, oil, gold, all these kind of things. The USD/CAD, the CAD portion, is affected by one major commodity,
Yep.
oil.
I learned that this morning.
Right. Where AUD/USD is affected by gold, silver, corn, a whole bunch of other things, right? And the commodity pairs like this, and there's a few of them, okay? Commodity pairs also usually have the base of the USD in them. Isn't that funky? Now, the hardship part here is how much does it get affected? If news is coming out with these things, it's great. But other things that, you know, the price of some of the things that are out there that don't get affected by news. So if you see like oil is skyrocketing, right? Let's have a look at something real quick. Let me see if I can find this on. I wanted to have this set up, but I don't think I'm going to be able to because I'm having some problems with my screen share this morning. But basically, when oil heads in a direction, you'll start to see how the CAT portion of the system flows. Now, because remember, if the USD/CAD pair is going up, what does this represent? Like, it means that the CAD is doing negative, right? It's doing it's having a hard time. When the USD/CAD is going down, it means that the CAD is doing great, right? It's doing better than the USD.
Right.
All right, so just keep that in mind. So when depending on the direction and how it gets affected, you know, which part of the pair, which part of the base, you know, or the quote is getting affected. So start looking at when news comes out on oil, what happened with the CAD. Let me see again. I'm going to try one more time. I do apologize. Appreciate your patience. Got that song stuck in my head now. We were watching a show before, Puddles Piddle Party with Puddles the Clown, and he singing the song "I Want You." Very funny. All right, share screen. Let's see if that'll work. Dun-da-da! I did it. It worked. Yay for me. Now let's see if I can find. Here we go. Yay! Can you guys see the screen?
Mm-hmm.
All right. So crude oil came out today at 10:30, and there's a lot of other news that happened during the day. But let's just look at crude oil for a second here. Where did it go? I just lost it. There it is. Crude oil came out. Now it was what it was projected at. Okay, so what it was forecast at and what it actually came out were two different things. So there was a negative impact on crude oil, right? So that negative impact on crude oil, let's get back over to the chart here. Do here and do here. So oil came out and it was a negative impact, right? Because it was however many million short of barrels of percentages or money or whatever on the thing. So let's just call oil as a negative. It came out red, so it's a negative, right? So now let's head over and look at what the CAD did at that particular point. Let's scroll down here and look at the USD/CAD. Now, what did we say? What happens when the USD/CAD pair went up, right? So that means the USD was doing better, and the CAD kind of failed, right? So we know right now that the CAD, when there is a negative position with oil, sort of correlates with a negative position in CAD, right? Which means that the USD will do what? Anybody? Bueller? It'll go positive, right? So if you get a signal that goes buy, is that one you go with or you go against, Mike?
Go with.
Yeah, there you go. Right? You watch this market. Now, depending on when oil comes out, but depending on when all that stuff happens, you got to be paying attention. You got to be looking at those things. You got to be timed perfectly. You have to have all your crap in a row. Okay? There's even some stuff with Forex that you can start trading with, and it's the limit order, right? You're like, you can hedge yourself in because you know when this thing's going to go, it's going to go far, right? Just by looking at this. Here's when the news came out, and it just went straight up. So we know that if news came out here and it was a negative, where would it have gone? It would have gone straight down. So you could have set yourself a nice little region on either side to take 20, 30 pips on either side. You see, so that's how you can trade the news. That's how you can work with the news. But you won't trade the news until you learn how the news is affected on all parts. Okay, so that was probably a pretty big opportunity for a lot of people to take in. So if the news came out here, you could have set yourself a margin here, or a buy stop here, and a buy stop here, or a sell stop here. That if it hit this mark, you would take a sell, and then you would take a profit margin, of 20 pips or so down here. But if it did get triggered and it maybe reversed or did something to that effect, because that can always happen. But in most cases, learning what the market does during the news periods, these big newses that affect pairs, you'll begin to see how much that pair gets affected and what's the rebound time for that. Right? Let me go back over here. Wrong one. There it is. Still kind of floating around up here, right? Now, I originally, right before the webinar, was looking at a possible structure look of all the way over here that, hey, this is going to be where it's going to really take it to. And what did it do? It kept on going anyway. Just took off even further. So now, is this another point of structure? And the answer is yes, there's another point of structure here. So could this be a resistance? Well, can't keep going on all day long, but it could. It could actually go to a point where, maybe it doesn't find a ceiling just yet. Even though that this would be the high of highs ever, ever, ever. You see? So even all the way back to here, which is almost a year or so ago. So keep that in mind as you're starting to look more and more into your trading life, and how do I trade better? How do I trade with more opportunity and get a little bit more advanced? You can start looking at what pairs get affected by what news, and how much does that news go for, and when does it start to sort of filter out, right? Most of the times when news comes out, I hate to think one. When news comes out, it doesn't just come. I mean, sometimes it comes out just in like at 8:30. It'll come out just one. There'll be like a 3 bull news there, right? Like you've seen this before.
Oh yeah. Yep.
There'll be just at 8:30. There'll be 3 bull news, right? And it'll be really, really powerful, and it'll move the market up and it'll move the market down. It'll do its little thing, right? And then it'll start to either start coming back down, or it'll what they call range out. It'll stay up in the range or what have you. Okay, but the signals at this level will get affected for a short period of time. Okay, if this is the signal range, right? But afterwards, signals are all back to norm. But there's also some cases when you get like this 8:30 hit happens, and you got 3 bull, and then you got a 2 bull, then you got another 3 bull, then you got a bunch of 1 bulls, then you got another 2 bull, and you get like a huge pack of news happening at this time. Just one second, sorry. I get all these buzzers going off in my ears at the moment. Lots of signals going off. All right. So what happens at this is that during the news time, with all this stuff happening, signals will get affected during this process, but sometimes even after the process. Why? Well, simply enough, news will affect the signal calculation. And that's pretty important to know as well. Becoming aware of the market, and I'll go into more detail with that. Becoming aware of the market, watching news in a direction. I'm sorry, I wanted to get into this. So the market will get affected, and the signal calculation will get affected because there is a portion of the signal calculation. What makes it an up or what makes it a down, what makes it a buy or a sell, happens between a priority amount of time, whether it's 2 hours, 3 hours, 4 hours, whatever it is. Okay, And if this is the world of the market, certain things happen. If news comes out here and it gets affected, it's still within a certain range. Once it finishes off, all things are back to normal. But sometimes there's enough news to say, okay, normally this should have been kept on going up, but there was a big fallout at this point. So if the news goes with it, all signals are normal. If the news source goes against it, what it would normally be, this is where the signal would, as it starts to go back to normal again, was called out as a sell instead of what it would normally be called out as a buy. Does that make sense, Mike?
Yes.
So the news, when it comes out, if it affects it hard enough, may trick the system, because the system has buffers in it, to kind of be careful, watch the news in that process. And if it reaches to a certain amount, even the new NA intraday part of it is actually now buffering out some of the signal process. But the stuff that doesn't have a buffer in it, like the dailies and the SR maxes and the intraday, you have to kind of take these things in consideration. So that means that if you have 8:30 news and it has like a ton of news in it, I usually give a point per bull, right? So a 3 bull is 3 points, okay? And between 6 to 10 points per a 1 hour period, you want to avoid the news for that hour, of course, but an hour after as well. That's what I'm beginning to see, is that if a signal does come out at that point, is to really start to avoid the news at that process. Now, Mike, at your level, one bull news and those kind of things can still affect the market, but your process is a little bit different because the news, your signals are derived at a micro-managed level. I think that availability of that timing, you're working with that trend. So if you're trending in overall, you're hitting these little tiny pockets where it'll affect your process, but that news affecting part is only a short period of time for you because you're in these little micro areas of movement, right?
Correct. Yep.
So where hours is really over a longer period of time, and the market's going to eventually crawl its way up there in all those little micro movements and maybe break the signal from that point or break the result. So I tell people that if you get a very large amount of news happening, like the oil stuff that was happening this morning, avoid that process afterwards for at least another set of signals, okay, until you feel like something's happening better. And what's a little bit of avoidance? And I know you're all here for like, I hear this all the time. Do you get this, Mike? I don't want to sit in front of my computer all day.
Yeah.
Right? So sit on Sunday night, look at the news system for the entire week and plan out your week. Say, okay, at 8:30 in the morning, there is a ton of news coming out. Max said avoid the up to 9 o'clock and maybe the 10 o'clock signal. So I'll be back at 11 a.m. to be in the room and start trading. This is your trading block now. If you can't do this time, find another time to be able to do it. Well, let me get up at 6 o'clock in the morning and trade from this time because there's no news happening here. I listen to Tim Willoughby, a very trusted source of this company and a partner and a friend and a really long-term friend. Talk about, I'm going to get up at 3 o'clock in the morning. I got to trade because tomorrow morning I can't trade at 8:30. And he was telling me his story. He's telling Mike the plan. And that's cool because that says that he has that will and wants to be able to make his trading life work. See, trading is not there to make it work for you. Trading is there to hurt you. This industry is there to try to find your weakness. Market makers, corporate traders, all that stuff, they're trying to figure your crap out. So you have to force yourself to work the market, not force the market to work to you. Right? Because that mountain ain't coming to you, Muhammad. Sorry. It's not going to happen. So you have to find ways to make that part work. So set your plan out. Start working with that process. Become part of your own solution. We've talked about this. Dozens and dozens and then as soon as I start talking about it, Tim Willoughby pops in the room. All right. So that's basically why the systems will win. It's sometimes even, because we have the margin, like on the dailies, there's such a wide margin there, it gets absorbed in that process and does a little bit of micro calculation for that news. All right. Any questions on the news part? Anybody in the room? Mike, you got any questions? Anything you want me to bring to the attention of anybody?
No, doing very well.
All right, let's get to the next one. Becoming aware of the market. How many of you just follow the signals? There's not a lot of you in the chat room right at the moment, but is there anybody in the chat room that just follows the signals? You know, I don't really need to look left. Just give me my signal and raise your hands and ride the ride down or up. Either way. Does anyone do that here? If you do, there's nothing against that. Okay, completely okay to do that. This is your trading life. You decide on how you want to take the information that we provide. But for me, I have to look. Right? I'm looking under the hood. I want to know what I'm eating. I want to know what I'm taking. I want to know what I'm building. I want to see how it corresponds with the market. What does it look like? I want to start confirming some of the stuff that comes over to maybe help me navigate when to be into a market, when not to be in a market. And just like I told you that the system itself will navigate through news, but it'll also, for the NA intradays, on those ones that don't have it, I need a little bit more information because stuff still could be tricked. Market movement can trick the signal system, the signal calculation in there to do stuff from one period to another. So you still have to be careful. But this is where the range of success comes in. If a pair is sitting at 86%, it's doing pretty dang good. Especially like in the intraday sides. And if it's sitting at that level, you want to know 14%, is there any way that I can kind of get in there and maybe make that only 12%? Well, you better start looking on when to get in and when not to get into trades. When will it go bad? And that's how you start working the process by doing the trades and then looking left, or look left and do the trades and see what the result is. We've talked about this in previous videos, but let me show you something that's very important when looking left. The first thing you're going to do when you look left is that you're going to look for the trend, right? We're all looking for the trend. Let's get to a chart and look for a trend. But before I do that, like I always like to do with just about any brand new time we're going to look at a new chart, is let me give you the purest chart available, okay? And what this is this is the Euro USD naked, basically, right? Can you guys see the screen? Mike?
Yep.
Okay. So we're looking at the Euro USD right now. And
No, There's nothing on the screen.
You can't see the
Sorry.
screen. Oh.
No.
Okay.
It's naked.
It's naked. Yeah, I did say it's naked. There you go. Yeah, it was really naked in that one.
Yeah.
All right, so here we are. This is the Euro USD on a 15-minute chart. Now, you can't see where it says 15-minute. Could it be an hour chart? Could it be a 1-minute chart? They all look the same. But let me tell you, structure is structure. Kind of gone down this level before as well. Now let me back this in here so you can see exactly what it looks like. We're on a 1-minute chart for the Euro USD. Now watch what happens. If I zip up to a daily, okay, and I just put highs, some lows, some mid-range levels, and then I simply come down to a 4-hour chart. Do those lines disappear? Do those lines not work anymore? The answer is no, they still work. They don't disappear. And look how accurate they are. Now watch what happens when I come down another line. Wow, look how accurate that is. Just by doing a daily high-low margin movement kind of thing. And not just because they work here on the daily chart one time, but they begin to see, oh my God, these things work all the time. They begin to show a range of support and resistance. And how long did that take me to do? A microsecond. If I drop down to a 4-hour chart, I can really start to see. And if I hit the 1-hour chart, I got to expand back out some to find out where the hell they all go, because now we're on a micro, starting getting really down there, right? Because the market's moved that far past it If I get down to a 1 minute chart, you probably won't see them on this one because it's so crazy on a 1 minute chart. Oh, there we are. There's the 1 minute chart. And there's the line we put on for the daily. But the same thing can happen when you go into a 15-minute trade, 15-minute chart, and do the same thing I just did on a daily. And this is where it really gets unique for you to find structure, okay? Because now I can come in, I can find my highs. Now, highs on like overall where the wicks end and where the base ends is completely up to you. You can almost consider this the range of that support and resistance area. So I'm going to put it right there because I can see my touch happens quite frequently at this point. Are you guys starting to see now that support and resistance structure, if you will, is very, very important when it becomes this precise? Because if I knew that this happened here and this was a pull in, right, and I didn't have any previous structure to give me, say, hey, look, 1276 to 1280 is a pretty powerful number. Why? Because 8 is a zero number to anything. 1280, 1270, 1260, 1240, all that stuff is a very powerful number all the way down. Groups of 10, groups of 20. Okay, very powerful. They have a lot of resistance and support. And look at this. 1, 2. Would have not been a good idea if a signal came in and said, and it came out right here and said, it's a buy. What would you have done? You could have looked at structure, previous structure, and said, I don't know if it's going to do that. I don't trust it. You can add it into your debate with your opposite side, which we'll talk about here later on in this webinar. You could say, this is a against check mark. If it said that, hey, this is going to be a sell, and there's proof from previous stuff, you have more of an opportunity for this thing to be a sell, because how much of a sell was it? It was a 46 pip sell. So you're seeing now that structure does play a big part. Now, 2 parts of movement of the market. There is what they refer to as an impulsive move. An impulsive move is usually 1 or 2 bars that will engulf 10 to 15, 20, or however many bars it will be on that chart, but it usually only a handful will engulf a bunch. Let's just put it down. I'm not going to give you a number. I'm not going to say 11.5 bars gets filled, right? Let's be serious here. You'll be able to see this. You'll see this as an impulse move. This is sort of a mini impulse move, right? But still a trend market. A trend, on the other hand, is considered any group of movement of bars that are in similar fashion, you know, all red or all blue, that are 3 or more. Now, is this an overall trend? No. If the overall trend, you got to kind of pull back and look. And this is where it gets, you have to get a little bit creative. You have to ask yourself, if this was like a news effect here, and if this is an impulse, what is the opposite of impulse? Corrective. That means that it's correcting what it just did by some sort of news alert. Okay, and this happened pretty early in the morning here on this one. This was 13, 6. This is 6 o'clock in the morning. What was happening at 6 o'clock in the morning this morning? Any news on? Let me see. 6 o'clock in the morning. 5 o'clock. Crazy stuff. Something happened at 6 o'clock. Still, whatever happened in an impulse move, and then it immediately corrected. You rarely ever see this particular part except in like big news stuff. But again, this is a 40 pip something move. This is a 70 pip move. Now, before this crap happened, the market was heading lower highs and lower lows, fell out, and it's like, oops, no, we got to get back. And look what happened, okay? If nothing had happened at that point, what would have happened? The market would have kept on going in that direction by this representation right here. It's almost perfectly lined up with that direction. right? And now things will start working out. So it was like, I don't know, somebody said something here, somebody did something here, and they got a big battle, and now they're trying to fix it. They're trying to make everything right. Leaders came in and were like, let's make this better. And that's what they did. They're starting in that trend again. So as you start to see some of this stuff, if you start to find the impulse movements and then correction, impulse moves, and of course, sometimes correction doesn't happen immediately. It may take some time, but you'll begin to see what does it take to get to that correction. Maybe another event happening. So not every impulse move has a corrective response, like here to here or here to here, but it does have a response. Sometimes an impulse will have continuation, like what happened here. Now, this impulse, this may have been the impulse here, or correction from the impulse here, and then it started to do its thing again because it was in an up position. Sometimes you hit a plateau or you hit a deviational mark that it's like, all right, well, we ain't going to get all the way back down there, so let's start from here. All right? So, but this is what you begin to learn. This is what you begin to feel. If it doesn't hit it back there quickly, what's going to happen to it? It's going to start to resume to do what it was doing prior to. But once you begin to see the impulse movements, the trends, these are all big things for you. Seeing the trend, seeing the impulse to corrective movements, knowing the levels, knowing the structure, other little things will start to take into play. But learn that first. Get to see how the market really responds. Start to see how news affects these levels, because the levels themselves get affected by news because sometimes they'll pierce them, right? But for every, and I'm going to show you something here that's pretty cool. Let me go ahead and remove all these lines here. But every time there is a support level made, right? Can it be both? Can it be a support and a resistance? Mike?
Yes.
Yes. Because once, if the pair is above it, if the number is above it, it's support. If it's below it, it's resistance. Now, the moment it's broken, it tries to do what? It tries to come back to it at one point or another, depending on how long it is. Depends on how well the structure is going on with that pair, how much experience you can actually see and start to feel. How long does it come? How long is it going to take to come back to that structure? And another part of structure is knowing when the trend has been broken, because remember, it's all about finding the trend and knowing what the trend is and the structure of trend and those different levels to know when something is not right. It's not going to continue on. And these 3 or 4 pieces of information are what's going to help build your list, your debate, okay? Because you're going to debate yourself here on, am I to get in this trade or not? Because when you're demoing, here's the fault on demoing, right? We go, let me get in and see what happens. Are you using the information afterwards? Are you journaling it? Or are you just living on the high, whether it's a win or a loss? If it's a loss, you're like, well, that didn't work. I can't do that. That's crazy. In Mike's world over at 5 Minute World, we call Puppy Land. There is a tremendous amount of work being done by people that take a lot of passion. Mike is one of them. Chase, there is Tim Willoughby, there's Carl, there's all these people in that network that are getting a lot of information on how the market moves. And the best way to get that is by what, Mike? What is the best way to get market information?
Charts.
By doing it.
Well, that too.
You get to learn how it feels by doing it. Somebody told me once, you can't play professional baseball if you've never swung a bat. You can read all day on how to swing a bat, but until you swing a bat, you're never going to get into the world of professional baseball unless you get out there and at least try to swing a bat. It's never going to happen for you. You're never going to learn how to read the market and feel the market unless you're in the market. You're never going to see the response or learn how to lose or do that unless you lose. How are you to learn how to fight if you've never been in a fight? There's all these great points that you can make and all these great quotes that you can have. But until you get in and start doing, but as you're doing, you have to take inventory of your response, what you do and how you do. And you have to know your training. You're not here to make it perfect in a few trades. We had a gentleman in Joshua who was in the 5-minute room the other morning, or last night actually. And he says, well, I'm just starting out new and I'm not doing so well. I'm losing trades. I don't know if this is for me. Never make a judgment if something's for you or against you by just once or twice. Okay. I mean, there's some exceptions in life. Let's be real, right? You know, fire swallowing, sword swallowing kind of stuff. Yeah. Only take it once. You know, you don't want to, if it doesn't start to work out pretty right, you don't want to be in a sword swallowing. Okay. But in this world, you have to really focus on one thing and become very good at it. If you can't become good at it within a certain amount of reasonable time, then we can start looking for other things for you. But give it its worth. Give it its due. 5-minute trading, how many trades are you going to need, Mike? What's an average? 2, 3, 4, 5, 600?
Yeah, oh, easily.
Right? But Mike can put in 1,000 trades and get the same experience as somebody else putting in 200 trades. Or somebody else might put in 1,000 trades where Mike can get the same experience in 200 trades. It depends on the individual. But I implore you, as a trader, as somebody who's watching this after the fact, you're in the chat room right now, is to open up a chart, get a naked chart, and practice this. Don't just take my word for it. Practice it. You know, in the Trader's Mind series, the original Trader's Mind series, I have you working with free indicators in there, the double stow, right? Why did I do that? Why didn't I just turn that into a signal process? Because I needed you to practice in a way that was going to yield you some experience and have you trade on your own. So by the time you get to a point of here, you're following a signal, you're following a process, and it's sharper, you'll know all the bases involved. This is what you need to do as well. Come in and just start laying lines down. Start looking at, get on a daily chart. Put them on the daily. Go down into H4. Put some on the H4. Turn them a different color. Every time frame down, make it a different color. Make yellow ones, make blue ones. It'll be a pain in the ass, but you'll be in to see where all the great motion is. And then just start looking for coincidences, other parts where it touches that market and how strong it is. More than 3 touches, that market's really strong. The only other thing you can do is do this. Sorry to go all salesy on you, but you can do this and bink and have one of these done. And this is the support and resistance indicator from dexindicators.net and the Dex MACD. These lines sort of do the same thing, but with a little bit more vigor, I think. You can see how consistent most of them are.
Oh my!
Isn't that why? Thanks, Mike, for the backup there.
No, I'm looking at the 45-degree angle down.
Oh yeah. Oh, that's a little bit more than 45. Yeah.
Oh no, I'm talking about the one a little bit in the middle of that. Yep, right there.
Right here.
That's so pretty. Oh my goodness.
Yeah, if you would have been right, yeah, if you've been right here, you'd have been trading 5 minutes all day long. In fact, if I put it on a 1-minute chart, look at that. That was beautiful. See, this makes Mike happy right here. This is a happy line for Mike.
Yes.
Right
oh yes.
He's like, let me get into trade backs. Let me do it. All right. But again, the level of trading longer term, trading outside, even if you're looking at this as an overall, you see where structure is. Now, let me go down real quickly and break down the structure for you. I want to get back to naked again. Indicators, deletes, and deletes. Okay, and here we are, right? Now, this is a pretty good, this is on a 1-minute chart, but it doesn't matter what time period it is right now. And we're just going to place our lines in here real quickly and haphazardly, right? Because I want to show you that these are like a high level and mid. Like if we just did that, right, we can immediately see which way is this market going, Mike?
Up.
Right now it's heading up, right? It's sort of heading up, right? But overall, let's just say in this picture of our world right now, the last
it was a downward trend.
Right. Now, how do we know it's a downward trend? Is by simply enough looking at some of the peaks and valleys, right? The peaks and valleys. So it starts up here, heads down here, does a counter trend, right? This is the trend heading down. Counter trend goes up, right? This creates what they call a high, right? But is the high higher or lower than the previous high?
Lower.
It's lower. So then we go down to the low. The very next low, is the next low lower or higher than the previous low? It's lower. So higher or lower highs and lower lows equals downtrend. Let me do that again. Lower lows and lower highs equal downtrend. There you go. Effective voice. There it is. That should be etched in your brain now forever. Now, this is considered structure. So if a downtrend is lower lows and lower highs, right? Lower low, or lower high, lower high, lower high, and then you get another high, it's a little bit lower, right? And then what happens? What happens here?
Higher high.
This one here,
lower high.
this is a higher high than the previous.
Right.
So what has happened? Structure has been broken. And structure is usually broken not by a wick, but by a closing bar. Keep that in mind. Structure is never broken by a wick. Structure is broken by a closing bar, whether it be on the 15-minute, 5-minute, 1 hour, 1 day, or what have you chart. Structure cannot be broken by a wick. It can only be broken by a closing bar. And why is that? It's because that's the commit. That's the committing to that level. Now, can it pop back over? Remember, structure is not a perfect thing. Support and resistance is not just one line. It's not 12, 78, 6. It is a range of 5 or 6 pips, 10 pips, depending on what level you're on, okay? And you only get that because each pair has its own value of how close it and how far it can get away. Now, but structure, okay, support and resistance can be a zone. Structure levels can be broken because you see what the structure was made of before. You can use the highs during that time, right? You can use highs or you can use close or opens. Okay? You can use that between the close and open to the high as a little range to kind of be in to give yourself a little bit more of a buffer. Now, if you had gone in for a sell from this position, like if you were right, let's put a vertical line here. If you were right here and you had done a, say, like a sell signal came out and nothing had been broken yet, what would be your indication to be like, hey, this thing may not be working so well for me? The moment it did what, Mike?
Broke through that.
The moment it did this,
right?
Because remember, if structure can't be broken by a wick, it can only be broken by a closing bar. The moment on this 1 minute chart, this bar closed, you knew your shit was broken. Right? Look what it did. Kind of confirmed it right there. Even though that you had some movement, if you got in here and it said for sell, and it said, and you said, all right, here's where structure is. You know how you all ask me, when should I get out? When's a good time to get out? When should I, when should I leave it? When should I stop my trade? I got green. I got $22 on. I want to get out. Great. If you were going to scalp out just as evenly as you do with the green as you do with the red. But most people don't know when to get out on the red. Knowing where structure is knowing when to get out. If you get into a pair, let's try something else. Let's look at this one.
Oh, look at that.
What? Oh, okay.
Oh, that's beautiful.
Sound like you're dying every time.
Let me get into that. No, don't take it away.
It's going away now. Distracted, Mike. Can't show 45-minute anything.
Ooh,
don't go to the hardware. Don't go to the hardware store later, man.
Ooh,
all right. So something like this. Did it have structure when we first started looking at it? Kind of got kind of crazy right in this area, right? If something doesn't have structure, does this become something against? Like if you were trading in this area, you got a little structure to see. There's a little bit of movement going down. But as I start dropping down in time frames, or even going up in time frames, you begin to see different structure lines because every time frame. So a downtrend in 1 minute may not be a downtrend in 1 hour. It might be an uptrend. You see, so it really is about how many bars back you're looking at and how much of a macro or micro look you're looking at. But depending on my time frame, if I'm in for an hour trade, I usually want to have about 4 times that amount. So if I'm looking for an hour trade, I want to have it down to about 15 minutes. If I got about a half hour left on my trade or a half hour look on my trade, I want to between 15 and 5 minutes. And if I'm down in the last 15 minutes to 5 minutes, I want to be on the 1 minute chart. Right? I want to be looking at where is this thing going to fall apart at. Right? If I got in on this trade and it was called for a sell, right, and I got in up here, man, my life is loving it. But if I got in on a trade and it said, if I got in right here and I got in right here and it called for a sell, right, and I had all this other stuff happening, I wouldn't have a clear understanding what structure looked like prior to, except by support and resistance areas, right? And how strong are they? That's what you have to begin to look at. How many times does it touch it and bounce away and reject it? Well, there's 1, there's 2. I only had a couple in there, right? So this is pretty strong. So if I got in for the sell and this, where this blue line is right now, was my mark of my statement on Nadex, I wouldn't know how much of a, if I was on a 1 hour chart and it's already closed above it, this might be something for me to get out on. Or if I dull it down to a 1 minute chart, I can go back and look at structure, true structure, because look, this is a downtrend happening at this point. When was the trend broken? Higher high or lower high, lower. It hasn't really, it's been broken right here, right? Mm-hmm. So at this point, I either got into a bad trade or my trade's telling me, hey, we're going against you. We don't like you anymore. We're sorry. If there's only like 10, 15, 20 minutes left and this was your line, is it going to come back? Once structure is broken, it will try to get back to it a little bit, but you're not never, but for the most part, you're not going to hit your marks depending on what time frame you're using. But again, learning how to read structure and use it for your benefit can be used for getting into trades, avoidance of trades, and going against a trade, or even scalping out for a positive or a negative. Now, if you get into a trade and you want to know, should I scalp out my good? Should I scalp it out? I'm at $22 profit margin on there and I got it for 30 bucks. I'm loving life. And it looked like this, like maybe this was your line and you broke structure and this was your line right here. Yeah, the answer is yes, get out. Get out because it's going to push that line and it might take a chance of losing. You got 20 minutes left, you got 20 bars left on that thing. Yeah, there's a possibility. Where can it go? Where's structure going to happen? How's structure going to lead you? If structure got broken on a downtrend and it's now turning into an uptrend on this 1 minute chart, maybe on a 5 minute chart, it looks like a counter trend. Structure high, counter trend, structure, it'd be structure high all the way up here. You get what I'm saying? Now you get to see how structure will start to unfold itself when your trade's going bad or be supported. If you were on at this particular market saying, should I get out? I got to buy on. Nothing's been broken. The answer would be no. Stay in. Ride it to your finish. If this was your expiry, ride it to finish. But the moment it gets broken, because remember, you're creating these lines that maybe as you go, all right, there's a high, there's another high, and then it all of a sudden starts to break that previous left structure. I think it's going to go against me. If this was your support, then you're done. But if this was your statement, you would have gotten out up around in this area. Is this making sense to everybody? Mike, is it making sense to you?
Absolutely.
I'm going really far into this today because I want you to have an understanding that becoming aware of the market is more important than the signals. The signals can live in a robotic mentality. I'm going to go in and I'm going to do this, 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 and this, and this, and be done. You personally aren't going to affect that signal. The market is going to affect the signal. Whether or not you get into it, it's going to affect your personal trading life. We've learned how to look left and find structure. We've started looking at the different pathways, okay, and how the structure unfolds itself, and how it's more about blocks. Now I want to talk to you about debating your inner opposite. Some people like saying, I want to make case for getting into the trade. I'm going to say you're going to enter into debate with another part of you. Now, you could be for or against or just leave it all together. These are the only three choices you have. Go with the signal, go against the signal, or leave out completely. Now, going against the signal takes a little bit more brazen and a little bit more experience. You got to know exactly. So what I'm going to suggest for you new guys, stay with the leave it, for or leave it. Okay? Try not to force yourself just to get into a trade just so you think you're going to make money. Because you're not debating yourself. Greed's saying, greed's talking to the starving dude. Okay? You have to be a voice of reason for the process. Now, this is not about intuition or gut at this point. You've learned how to read structure. You've learned how to work with that process. Your experience is also filling in your head. So you have to create yourself the checklist. The structure of this debate is simple. Just like anything else, you make a list of rules, pros and cons, a flow sheet, if you will. And what do you look at first? First, you look at news. Is news there? We've talked about this on Monday, too. I'm going to pound this into you guys' head till you hear it and till you just live in it. If news, is this for or against? If there's news, are you for or against it? Well, unless you're news trading, but let's just pretend you're not news trading. If there's news, are you for or against a trade? Anybody in the room? Mike?
Against.
Okay. So you would say, no, can't trade. Now, if there's no news, right? No news. You're for it. Now you're saying, okay, there's no news. That's one for the for. Right. So let's do this on a whiteboard too. Put a line down the middle. Call this for or leave. Right. We won't say against, but we'll just pretend that leave is actually against as well. Okay. And we say news. If there's news, it's for and against. So that would be one for the against. And this is probably where most of you had stopped out at that point, right? So news is the ultimate, should there even be a debate, right? So news is up here. If there's news, no debate. They called it on due to news, right? But now we got to look at, for the signal, which way is the trend? Is the trend going with it or against it? Okay, so if it's going with it, this is a big indicator for. If it's a counter trend and you're good at making counter trends, remember, this is where your list has to be more personal than anything else. If you're trying to find the counter trend, you can spot the counter trend, right? Because what's a trend? The trend is lower lows, lower highs, right? So this little up here is called the counter trend, right? This is called with the trend. So if your signal comes out and it's saying, you've already had this little hill happen, and it's saying a buy. Yeah, it could still do a buy? Yes, it could do a counter trend right here, right? But again, you're going to have to see how this all plays out for you. So making the list for yourself of what you like it to be is it a trend for with the trade? And if that's one of the things you want to be, yes, I only want to deal with trades that are with the trend, then that's a debate for. That's for getting into the trade. The next is support and resistance with you? Okay, remember, support or resistance. If the signal comes out right here and the market's up here and it's saying it's a buy, and this is a pretty strong support, and there's like tons of touches over here, okay, and it's saying it's a buy, and you're like, yeah, no, sorry. So support or resistance with you, if that's a check, that's for a 4, right? So support and resistance is another big one. So you got trend, you got support and resistance. And now, finally, is structure with you. Remember, even though that trend, support and resistance, and all this sort of is all still fitting in, is structure working for you? And if it's not working with the trade, if structure is still hasn't been broken or been tested or been pushed out, then that's another reason to be in the trade. Now, as you get the experience, if one of these things is over here, there's no trade, right? But as you get the experience, if enough of these are no, this might be an opportunity for what? A reversal. Let me do that again. A reversal. I know it's corny. I like it. So the idea is to find all the reasons for to be in a trade, to be in a trade, to be in a signal. Is there news? And how long does it take to really do this stuff? Mike, how long does it take?
Seconds, really. It really isn't that long.
Yeah. Minute or two. Now listen, if you're in 5-minute trades, your idea is a little bit different. Your process is a little bit different. You're not going to sit and microanalyze it all within milliseconds of getting into the trade. Or do I got structure? Do I have this? Do I have this? But you can do. You're still doing a few things. Mike has the 45-degree angle. There's the support and resistance already in the WB. There's these things. You're looking at the market. You're looking at the market, and you're absorbing. Let me get to a WB. Bear with me. You're going to hear a lot of dings happen at the moment. Okay, maybe you got your 4 square up. And another piece of word of advice: if you're trading 4-minute or 5-minute trades, kind of stay away from all the other ones just yet. Okay, all the other pairs that are down there. Okay, because they're not coming out live for some time. And trading on, just get yourself trading the standard basic format. I put the other ones in there for a reason. So for those people that had to have it in there, but I wanted you to see, have that opportunity, but just trade these 4 for now, okay? That's my best advice to all of you. If Mike has something else, that's fine. If you guys want to trade him, do whatever, okay? But let me show you. You have most of all the information here that you need, okay? You can pair back on the WB. You can look at where the support is. Is it too close to it? If this was a buy and it was right here, that'd be a for and against. There's a 45-degree angle. These are the things that are for your list, right? If this a buy was coming out right now, I'd probably say no because my MACD is telling me otherwise.
Right.
All right. Trend. This one trend coming down. It's here. This would have been a buy. This one would have lost at that point if it came out. If this one came out, probably when it says go short, you would have probably been told to get into that trade. This would have been pretty close to that support resistance zone. So I would have probably avoided this one because of that. At that point. But again, getting in and making the trades and making them happen, you're going to just like those things just came up. Now look at this one, right? This one just came out. It's the Auto USD. It has, Mike, that's a 45-degree angle, right?
Looks like it, yeah.
Okay, from here to here. This could have been something like if there was no news, nothing happening right at the moment, that would have been a viable trade to get into. But all your information, how long did that take? My flow sheet for 5 minutes is a lot shorter. Now my flow sheet for 1-hour trades or any intradays, try to get the base sequence here.
It's very cool listening to Max going through his trade things. It's really, this morning I was privileged to, when he put in a couple trades, I actually got in a trade, which won, by the way, Max.
Yeah.
So he goes over this, okay, I'm here we go, here. I don't like the structure here. All right, forget that one. And then it just goes right down the list. It's really cool.
That's all it is. It's a flow for me.
Mm-hmm.
And I come in and I look at, like right now, this is a signal. This is a live signal. It just happens to USD CAD was massively affected by news on the oil, right? I come down, I look at oil, I look at this, and I look back at structure, and I tell myself, this one's a little bit far out. Here's where some of my major structure is happening right now. Some of my high-low stuff is happening right there. But structure's majorly been broken, right? Down, 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 and smack it. Now, is it going to try to get back? Yes. This is eventually going to try to get back down to where that line is going to be heading into that structure again. So is this a possibility? If I had enough room, here's the USD CAD on the sell, 35.25. I could go over to, I'm not going to go into live. Let me see if I have my live account. Yes, I have my live account here. But I'm not going to go into live, not on a webinar, not in this process. I don't want to make some mistakes on my money that way. But I'm going to show you in here. USD CAD. Got to hit refresh. Binary, USD CAD. It's the one that's out to 2 o'clock. Right? You already know that the signal, usually I have everything lined up here, so I do apologize. I'm 35.25 on the sell, right? Because we know it's going to be heading down at that point. We feel it's going to be heading down. So 35.25. So 35.24 is sitting right there. That's about a 1 pip off. I'm not too much worried about that. I'm going to put in my trade for here. It's on my demo. I'm going to hit my money on. Now, why did I hit 5? Because I trade 5 in my live account. That's why I trade 5. I demo out how I trade live. That's how I demo. Don't come to me and say, I just traded 100 because that's how I want to trade live. No. How I trade live right now, because I just came back as 5. 6 weeks ago, 7 or 8 weeks ago, I traded 10 at a time. Okay, so now I trade 5 because I'm just getting back into, I've incrementally crawled myself back up again. And this is how it works out. Why do I even bother still with demo? Because I keep the freshness of how I look at structure and how it evaluates, how I evaluate it. If I don't get a good for or an against, or for or leave it, and I get something in between, I'll leave it. If I'm not 100% sure, if it's not in my gut, it's not in my feeling, I'll leave the trade, or I'll do something against it. But if I'm not familiar with the way that it goes against it, I'm going to do a demo trade to test it. Even though that I've been trading for many years and I've really got the experience behind me and I could sit and do this all day long, why do I still trade demo and do that? Is because what Mike said earlier, I go through that motion. I'm training myself every day. There'll be times when I'll get into a point I might be too tired for the day, and I trade in this to keep my wits shut about me, and so I can get the information, but also because I may not be seeing all the variables that I normally want to see. I might be too tired. It might be a hard day for me. There's some times where I'll go a couple of days and I'll trade demo just to keep my mind that I'm absolutely sure. I get hit by the same thing everybody else gets hit. I got kids, I got family, I got things that happen in my life, I got illnesses, I get sick, all these things. Don't think you got to come in and just trade, give me my money, my money, and get to that point. The reason you're here is to learn all these tips and tricks in the process, and this is what you're getting today. All right, let's get back into the final part of, we went a little bit over today, but I hope you guys got a lot of good stuff out of this today. So we know about making the for against, finding the price levels, finding direction, trend versus counter trend, and going sideways. Start to see how all these things look at. Before I get into final thoughts, Mike, do you have anything you want to contribute? You want to put anything down today? Do you have anything you want to tell me?
We went over the scalping part, which
good.
is what we wanted to do. So
yeah, just to retouch on that. The scalping is that if you're going to learn how to scalp, especially on a 5-minute trade. It's in the micro minute. You're on that minute chart anyway, and if it closes, you can't say if a minute chart closes over on a 5-minute because it can come back at that level because you're only dealing with a couple of pips. But in your 5-minute side, I got to tell you guys, it's set it up better than ever before. Only get in on when everything is absolutely perfect. No indication of curling or on the MACD, or it's got to be within 4 pips of, can't be within 4 pips of, start making your rule set in there. Especially you guys, you're center trading right now, which you guys don't know about, but there's some new stuff that's being in there tested that's really got everybody excited. Thanks Tim Willoughby and a handful of other people that are testing that stuff. You know, you guys got some work to do. It's a set and forget. Keep it going. Don't put too much more thought in it. Let the numbers do their job. All right, that's about it. Let me get into
Max,
the final. Yeah.
Real quick before you, I'm sorry. The main thing that Max was saying about demo, when you get your, when you go in and you get your money for the day, I personally always demo because I'm on the phone a lot with you guys, but I like to keep sharp, and that's the way to keep sharp. I mean, if you're trading 3 times a day and you're getting your money, that's great, but you also want to stay sharp, in different time periods when you're, if you don't get your money at that particular time.
Because put yourself into a position to learn other time frames.
Right.
You know, what other time frames? Practice on other pairs. Listen, we have a gentleman who trades with us, and in the very beginning, it's very difficult because he had a little bit of misunderstanding with a lot of the spreadsheet stuff, but he worked very hard to figure it all out, and he came up with this idea for us that focus only on one pair, and he just does the Euro JP or USD JPY. That's all he does. Came in last night and did what, 5 and 1?
Yep.
Okay.
And he made, see you guys later.
He made his money. He's like, and this is what he always does. He comes in, he does his thing, and he's gone. His name's Carl. I love Carl. I didn't name him before. I'm going to name him now because he deserves that respect. And Carl's very, very strong with, this is what I'm going to do. Until I learn how to do another one, I'm just doing this one. And he's figured it out. He knows how it acts and how it does him. And when he's done, he's done. He's made his money. He's gone. See ya. Thanks. Bye. All right. Let me get into the final thoughts, so I can let you guys all go. I'm at where I'm at because I've made a choice. And that choice that I made was very difficult. How do I, me, Max Farrow, make myself the best person I can be in business, in working with people, in being, whether you want to call me humanitarian or a realist or what have you, how can I be the best? And it comes from, and maybe not the best, like I'm better than you, but the best that I can do. To battle myself, to debate myself. How can I be the best person for me? Not better than you or anybody else, but best for me. And I found the secret. Ready for the secret? It was in making the choice to do it. That's how I'm the best. I have this saying that I used to tell my wife all the time. She's like, because we were trying to figure out if we were going to have a baby. She goes, how am I going to know if I'm going to be a good parent? I'm always going to be worried. And I told her, the fact that you think and wonder if you're going to be a good parent will make you a good parent. And that's the same thing most of you are going to have to do right now in your trading life. You're going to have to make a choice. Is this what you want to do? And if it is, the choice itself becomes the modifier of how well you're going to do. Because if you've chosen to be the best for yourself, to be the best version of you, that's what's going to make you the best in trading. That's what's going to make you successful. Nothing else. It's the choice. Once you make the choice, then you have to do the second part here, which is give yourself the time to do it. Now, the time, there's no clock on the wall. It's like not even a sundial, not even a calendar. It's just making the time to do it will become, one day you'll just sit down and you go, oh, God, I can't believe this. I've been doing this for a year, and I can't believe how well I'm doing. Or I've been doing this for a month or 6 weeks or what have you. Now, once you get to that point where you've made the choice, you've gotten the time, you're making that time, honor it by giving it your all, as much as you can possibly do for it. And some of you don't think that it's the same as somebody else's. It's not the same as Mike's. It's not the same as me. It's not the same as Brian. I work 14, 16-hour days. I don't expect anybody to do the same exact thing that I do. Mike's a beast when it comes to trading 5-minute trades. I can't do what Mike does in trading 5-minute trades. I'm sorry, my mind would explode, my eye would pop out, it'd be on my desk.
Oh my goodness.
But I know that I have my qualities and the best that I am doing, and I honor it by doing that. I honor my choice and my time by doing the best that I can. And lastly, that choice that I made also included to me become a leader by action, not by doing. not by telling, but by doing. And I get very frustrated because I see and I hear and I talk to a lot of people that have come from other competition, have come from other companies, and they say, and I seen a video that came out by a company yesterday. And I don't even want to mention the name, but I seen the video come out, and the guy's like, and he shows a video of him being into a Nadex set of trades on a live account, and he shows not his balance. He doesn't show his balance. That's a little bit creepy, but he doesn't show his balance. But he shows all these trades that he's in. He's in like 7 or 8 trades, and they all got green on them. They all got money on them, right? But there's not one explanation. Now listen, the explanations, and I know the company themselves, they don't do signals. They don't do training. You have to have their system on their broker with their stuff. They have to have all this stuff in there. And their indicators only work on those platforms that you have to have an account with, and you're stuck with that. If you're looking for that, you'll find that company out there somewhere. Trust me. You just kind of look up maybe bullshit trading, whatever. I don't know. But that was really me, and I'm sorry because I'm mad at this company for what they've said and done. But they've shown all this money being made, and what's negligent to me is that the leader in there showing that he can do it. Okay, that's cool, right? But there's no action in there. There's no showing, here's the thought that I made to get to that point. Here's what I've done to get to this amount of money. Here's how I've negotiated. I'm just going to give you a tool with a process that will give you a choice that you can go up or down from this point, and you make that decision, and I'm going to charge you $1,000 to do. Here to start to show you how to figure this out yourself, to make and become that leader for yourself. And I want you to have that one, the signals are there to help you, and they're only an event. But I eventually want to get you to a point where you won't need signals no more. And those things that are coming for you, okay, you got to go through this training first. You got to go through this process first. Get yourself to that point where you're ready. Because if you're not ready for it, you could lose a lot of money too. But I'm going to show you from this point on, by the videos that I'm doing, how I go through the process, think of the process, and put it on the board, and become a winner or it becomes a winner or a loss at that point. I made a conscious effort that I wanted you to see the entire thing, become a leader of action, and not by someone who just gives you a whole bunch of theory. And that's very hard for me. Mike knows that I don't like trading live in videos. I don't like trading live in a live format on webinars. But I'm going to do them in these videos, and I'm going to put them out for you to see them. So you can see me trading and the mentality that I trade behind it. And sometimes you'll be surprised. I may decide not to trade at all and just trade in demo and give you some thought in there. But you'll know those times too. All right. For everybody who's watching after the fact, I want to thank you for your time and really appreciate you getting to this part. This was a pretty long webinar today, and I do apologize. Well, actually, no, I don't apologize. I want to thank you for your patience, but I don't apologize because I'm doing the best I can to train you. And sometimes, I go off on a little tangent, but I guess you just have to deal with that. Mike, thanks a lot for hanging out, man.
My pleasure, Max.
Listen, everybody in the room, if you want to have some questions and answers, jump in the chat room. I got some stuff that I have to go take care of, and I do apologize, but I got to run. No questions and answers today. But everybody else in the if you have questions, head over to the chat room, hit us up on support chat, or email me at max@dextrader.com. Okay.
You got that consult, Max.
What time is that?
1 o'clock.
Wow. Well, I'm not making that one on time since I didn't create Dex Trader time machine. All right, everybody, I got to get going. I'll see you all soon. You take care. And as always, Mike.
Trade well.
There you go. Take care, guys. Thanks, Mike.
See you, Max.